Okay, let's go ahead and get into the stock market technical analysis. We're going to go ahead and look at the broad markets. I'll look at some individual trade ideas. We'll go ahead and wrap up. I'm going to put out 2 videos today. This is the general video. I'm going to put this out for the just live stream or for the general YouTube channel. And I'm going to put out a separate video with additional trade ideas. I'm going to go into a lot more trade ideas for the private member group in the second video. So if you're interested in that, feel free to join up. Link in the description below. It's $5 a month. You can join up for 1 month, cost you $5. You can leave if you're not finding value. So check that out. Link in the description below on that one. Let's get into it, guys. Triple Qs. All right, so selling off today. Give you, basically another gap down and then sell off. Yesterday's pump was just, as far as I can tell, just that. We're still in a range. To me, it looks like distribution. All right, we're still stuck in this range here on triple Qs. Momentum is dropping. Each bid is getting sold into. We're actually making a series of lower highs. So if you look at I think it shows up on the hourly chart. Let's dig into the hourly here on the triple Qs. Yeah, you can kind of see it here. All right, you can see not my fibs, my line tool. We are, kind of making lower highs like that. And it shows really clearly on the NASDAQ futures. Again, the private member group yesterday, one of the posts, this is one of the charts I gave the private member group yesterday. This is the downtrend line on the hourly. So I basically said the rally was very likely going to end at this downtrend line. All right. And I pointed it out before we were there and then pretty much told everyone at the end of the day, we closed right at that trend line. And there you go. Rejection. So we're making lower highs. All right. That's it. We're the dip buyers are getting sold into. And as of right now, it's still sell the rip. There's going back to the triple Qs. We still need to take out the big level of support to really help firm up the short trade, which right now is about 430, 380 ish, right in there. We need to take that out with an impulsive daily close. You see a gap down. That's going to be an impulsive daily close because essentially it's going to trap all the longs for this big long sideways pattern here. So that's the way I'm leaning. I think we're going to get a gap down. I don't think it's going to just come and just break and give the bulls an opportunity to just exit their longs and say, oh, okay, we broke support. Let's go ahead and get out. I think it's going to gap down and gap and trap basically. So gap and then sell off. That's just me, and that's just speculating because obviously it can do anything, but support, it's about 433.80. Yesterday they were bidding Apple. It kind of started to break out a little bit on Apple, hitting close to resistance. There's some resistance. Let me see if I got this right. It's right in here. It's anywhere. Yeah, we'll go with that for right now. Resistance is about 178.50, maybe a little bit above, but basically a zone of resistance. So that's holding. But then you see as they're bidding Apple, because Apple, from the highs, Apple's down It's down 15%. So Apple's been weak, Tesla's been weak, and then the rest have been relatively strong. But now they're selling all the others. So again, it's this game of whack-a-mole where one pops up, the others sell, one sells off, the others drop. That's what's kind of going on. But when I look at like Nvidia, that's selling down. Nothing's technically changed. We need to take out some of these lows. So I'm not saying like tons of damage done in the Mag 7s. And again, it's all going to probably come in together back on the triple Qs when we break that low. Okay. Looking at interest rates, this is the 2-year interest rate. So it's just the 2-year, the Fed fund futures, kind of where the Fed sets interest rates, usually is very close to what the 2-year set at. The 2-year right now, backing off a little bit today as we're seeing some people buy bonds as the market's basically dumping down to like 4.87. So again, I think that the Fed can't cut rates. The Fed rates are set at 5.5 to 5.25. I think they're at 5.30 basically on the on the short-term interest rates. So they can't cut very much. They've got maybe a 25 basis point cut right now. Now, if bonds catch a bid because the market's selling off, you'll see the 2-year start to drop. And then as it drops, that opens the door for the Fed to actually give you those rate cuts. Okay, but that's only going to happen if the people are selling stocks and buying bonds. All right, and so again, it doesn't do any good to anticipate that the Fed's going to cut rates and be piling into stocks if the only way the Fed can cut rates is if the stocks sell off. So again, I'm still leaning that way. I think we're going to see the market sell off. Bonds probably catch a bid, and then the Fed will be able to cut rates a little bit. And then here's the 10-year Treasury yield. Again, backing off a little today, but still relatively elevated. I mean, we're really not that far off of the most recent highs in this cycle, which were about right up here at 5%. We're at 5.5 right now. So we're only, we're not too far off, and the market's way out of bounds in terms of where it's at compared to where it was at when the interest rates were back in October. Back in October of 2023, when the interest rates spiked, you can go back to the SPY, and there it is. Stocks were way down here when the interest rates were high, and really stocks aren't too far off of the all-time highs right now, and yet interest rates are climbing, and they're not too far off from where they were back in October. So I'm as far as I can tell, it looks like we're gonna get a pullback to some levels of support. As SPY's got some support here at about 478, 480, the 200-day below. So I think we're gonna back off. The 200-day will probably come up. We'll probably check that 200-day. That's what it looks like to me. Again, we need those sell signals on the kind of the Mag 7s and the triple Qs. Okay, I want to talk about gold and the dollar because obviously I have not been putting out a ton of trade ideas long gold. So here's the dollar. This is what's kind of kept me not wanting to engage with gold and gold miners right now. Kind of two things. One, the dollar's rising. That's a good size move where the dollar is starting to spike up. All right. Usually in times of fear, when people are selling stocks, they're rushing to the dollar. That gives the dollar a bid. So I think that's what we're seeing right now. But a rising dollar, because gold is priced in dollars, is typically negative for gold. Okay, so I can't. It doesn't make sense from my perspective to go long gold and gold miners as the dollar is, rising. And again, we are seeing a rising dollar. Okay, so that's it on the dollar. And then if I flip over to gold's starting to come in. All right, it was up today. Here's gold futures. You can see we popped today, but they've been selling it. Gapped up and then they've been selling it. So, and then here's the gold miners. Again, gapped up and they're selling it. So potential for a bearish engulfing candle. Day's not over, so we'll see where this closes. But, all these miners were up 5% early this morning, and they're all basically flat to down now. So really nothing but sellers have been coming in on gold. So we'll keep an eye on it. I don't want to short it. I don't think it's a short, really, that I want to participate in. But, again, I don't want to chase the move, the up move. And also oil. Oil's been rising, all right? There's your rising oil. And rising oil, that's probably the number one or number two cost for gold miners. You got oil and you got labor, the two major inputs for their cost. So rising oil, rising dollar, something's not right about gold right now. Yeah. And we'll wrap up with JPMorgan. JPMorgan had earnings this morning, selling off on earnings. Again, most of this was priced into the chart, though. It was a very bearish setup going into earnings. What we have here on JPMorgan, we've got support. All right, support. This is an uptrend that it was following. Broke support, and then it was back testing from underneath. Resistance. Recovered it here, but that recovery was a divergent recovery. You had negative divergence that was building. This was negative divergence, putting this recovery here in with a high probability of being a false recovery, a false breakout, and then obviously coming in earnings, gapping down, selling off. I don't think the bulls are going to recover this one. To me, this looks like a big sell signal. Okay, that looks like a big sell signal. Now, I think they'll probably step in and buy it maybe on, the dip buyers, they're just programmed to buy the dip. They'll just buy the dip till till they lose essentially. So I think the dip buyers could come in. We might see a little bid from this move. It very likely, from my perspective, should be sold into or shorted into. So if anything, a rally into resistance that would give you an objective opportunity to potentially short or add to a short if you're already short this one. Okay, so that's what I see on that one. And that's really all I have. So again, I'm going to wrap up. I'm going to start working on the private member video. We'll get this video out. Feel free to join up in the private member group. Link in the description below. Catch you guys on the next